What's up guys, Ben here and welcome to Motivation to Invest. The controversial big data company Palantir has recently IPO'd for $21 billion. This has had many investors interested, but the real question is, should you guys be investing into this company? Well, in this video, we're going to find out. I'm going to deep dive into the people behind the company, how the company operates, the financials, and whether it's a good buy or not. So if you're ready for that, let's get straight into it. So Palantir is actually founded by the great billionaire investor Peter Thiel, who's famous for being one of the first investors in Facebook. You might have seen this on the movie The Social Network. And he's also a co-founder of PayPal, along with the great Elon Musk. Peter Thiel is part of what's called the PayPal Mafia. This was a selection of founders and employees of PayPal who went on to do great things. Examples of people who were in the PayPal Mafia include the great Reid Hoffman, who founded LinkedIn, and of course, Elon Musk. So as far as the CEO and management is concerned, Palantir gets a big tick from me. But what about the business? How does it operate? So Palantir is a big data company, and generally it sees that many companies collect this vast amount of data, but it's all segmented into different silos. Palantir's job is to collate this data together, synthesize it, and spit out well-informed decisions. According to their own words, institutions have the data they need to make the best decisions for safety, stability, and prosperity. But too often, their data is fragmented and locked in silos. The people on the front lines of our most important problems don't have the information they need when they need it most. At Palantir, we build software that lets organizations integrate their data, their decisions, and their operations into one platform. Our software empowers entire organizations to answer complex questions quickly by bringing the right data to the people who need it. So the firm launched in 2003 with backing from Peter Thiel and the CIA. Palantir has been described as the scariest of America's tech giants due to the vast amount of data it collects. They started working with US soldiers in Iraq and Afghanistan and now supply software to police departments, other public agencies, and corporate clients. Palantir's revenue comes from a variety of government clients, from the CIA to the Ministry of Defense, and many corporate clients such as BP and even Airbus. However, this does have a risk for investors as only a few clients make up their vast revenue. This means that if there are political issues or if one government or corporate company stops using Palantir's software, then this could really hit the revenue massively. The opposite of this would be a company which has a vast number of small clients. So here's some interesting headlines recently from Palantir. US Army Research Lab selects Palantir Technologies for $91 million artificial intelligence and machine learning development program. So with all this data being collected, what are the major privacy concerns? So Palantir's rise has been shadowed by concerns from privacy experts who say the firm's tools enable surveillance and analysis of data, everything from driver's licenses and social media posts to DNA swabs. Critics say this skirts people's right to privacy and is ripe for abuse. In the US, the use of the technology by immigration authorities to help round up undocumented immigrants has drawn heated protests. And in the UK, the health data handled by the firm has also raised alarms. Just before Palantir IPO'd, Amnesty International issued a report saying the firm was failing its responsibility as a company to protect human rights, with inadequate due diligence into who it is working for. According to Just Futures law, we have to move away from the idea that data analytics and data collection is objective or clean or immune from all the pathologies that we're seeing play out right now. Our governments are the problem because they don't want to set up oversight, but Palantir takes advantage of it. Palantir is not your traditional Silicon Valley company. For example, companies such as Google turn down large Pentagon projects due to backlash from many employees. Palantir says it does pick sides and it's happy to work on government and defense contracts. So what about the financials of Palantir? Well, to find out this, I delved in to the S1 filing, which all companies must complete before they can be listed publicly. So Palantir's commercial business has grown and it now accounts for 53% of the revenue, which includes customers such as Airbus and BP. In 2019, the firm brought in $743 million in revenue, up 25% from the year before, with some 60% of sales from outside the US. But Palantir is still making a massive loss at nearly $580 million just in 2019, and it relies heavily on this small number of clients for the majority of its revenue. Palantir's backers and founders have also come under major scrutiny. For example, Peter Thiel is surprisingly right-wing and donated over $1 million to Donald Trump in the past election. However, at this election, he's decided to sit out. Thus, many liberal US politicians have asked financial regulators to investigate the firm. So looking at the consolidated statements of operation data, we can see revenue 2019 $742 million, 2018 $595 million. We've got gross profit here 165 and 242 in 2019, so a massive jump there. So why is the company still losing money? Well, operating expenses, so we've got sales and marketing. It's spending $450 million on sales and marketing. Research and development, another $300 million on research and development. These type of big data companies working with government organisations can't afford to let anything slip. And then another $320 million on general and administrative processes. This brings total operating expenses of over $1 billion, and thus losses from operations at $576 million. However, another interesting fact which I discovered about Palantir is their interesting voting structure, which is not good for investors. So most businesses which are on the market tend to have a two-class voting structure. For example, let's say a company like Google. They'll have Class A and Class B shares. One type of class will be for everyday investors, and the other type of class will be for the founders, which may be worth approximately 10 times more shares than them. The idea of this is to generally give the founders more voting rights. But Palantir has an extremely extreme version of this. So Palantir has a unique free-class voting structure where founders have complete control over the company above the shareholders. The founders have given themselves a stock type which has a variable number of votes. Now, this is very interesting because usually if a founder has a stock type which has, say, 10 times the number of votes, they still have to have a lot of shares in the business to exercise some control over the rest of the investors. However, if they've got a variable number of votes, theoretically one of the founders could have just one share of the company, yet exercise almost the entire control of the business. And to me, that seems complete madness, as they could sell off a lot of their shares and still be in charge. And the whole idea of taking a company public is to have input from shareholders. But with this voting structure, many institutional investors will be asking the question if this corporate governance is right for them. And I believe this may also put many institutions off. So what are my final thoughts on Palantir? Well, I do like the founders and I like the management of the company in terms of their intellectual ability. However, I don't like the voting system they set up for the shares. In terms of the operating model of the business, I do like it. Big data is a growing industry and definitely something all governments and commercial companies will need more of in the future. But what I don't like is this company's lack of transparency, the fact that they are losing over $500 million every single year, and they only have a few customers that make up their entire revenue. Oh, and not to mention, the valuation is also pretty high. So personally for me, I will be keeping an eye on this company, but it's not for me right now. Perhaps in the future, if the valuation drops, I may get in there. But what are the alternatives? Well, if I wish to invest into a software business, I potentially look at, say, Salesforce. They're looking pretty good at the moment. They have a slightly better valuation. And there are many other companies which you can check out. I'll leave links below. I've got so many companies which I've said, my top 3 stocks I'm buying in October. You can check those out. I'll leave them on the links below, and then let me know what you're investing into. And if you guys found some value in this video, feel free to give it a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock market picks, which I personally have been investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I'll see you guys in the next video. Invest safe.